Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action, where I think things are heading next and all that great stuff, jumping into some data and news and reviewing where we are with trades as well. Now as I get into today's video, if you find this useful, informative, maybe even entertaining, smash that like button. I really do appreciate that. If you're new to the YouTube channel, why not go ahead and subscribe and tap the bell. In doing so you will not miss another video update. If you're watching this on Twitter, give us a follow and remember to give us a retweet. It really does help push out the content to more like-minded individuals. So let's go ahead and kick things off with our hourly time frame. For the price action of BTC. We hit our target yesterday, and this gave us some opportunities, which I'll talk about later in the video. But you can see here, we were looking for a move slightly down deeper, right? 29,287. That's kind of where I wanted to see this B wave. We actually came down and bounced from here. Nothing terribly too unusual with this. It is a nice correction. It's still three waves down. You can see the A wave came up a little bit higher here. So it's 3 waves down here. Good reversal and then good shoot up into this high equilibrium, as we were talking about yesterday. Our target range for this was 29,646 to 29,729, and then obviously from here was a good reversal point. We came down very nicely and we're looking to bounce on up. Looks to me like we still have some potential here to the upside before we continue the move down. Let's go ahead and reflect on that here. We can see that we potentially have come down now just to this low point with a potential move back up towards our range around here at 29,569 to 29,618. This would be a 3-wave pattern, an A, B, and C. If I actually go ahead and snap that into the right place. The lower that this one goes, the lower that the B wave goes, the lower our target becomes. But ultimately, I'm looking at this as a 3-wave pattern. Our move to the downside at the moment also looks like it's in and around this area for completion. Take it into a 15-minute time frame here. You can kind of see you have this structured move here at the moment coming down. This is a nice lower lows and lower highs, and we are looking for that next break to the upside. So I'm not too concerned over this one at the moment. It does look like we're going to be pushing up here, back close to this higher range, where I then expect us to then move back down quite nicely. So let's go ahead and push that in from our smaller time frame here. Okay, so if we go ahead and hit the higher range of this yellow box area, then our target to the downside is going to be down here. And we're going to be targeting out a double bottom situation between 29,087 and 29,188. Now, there's a lot of things that are subject to change within this. So this is just a broad view at the moment. We'll know more as time progresses. Once we complete this move to the upside, we have a good anchor point. We'll be able to kind of predict out more where we're going to the downside here on the 3-wave pattern. Ultimately, we might want to look at this thing as a head and shoulders, depending on how you look at that. And we might see an impulsive break to the downside here, taking us down even further. 28,925 is going to be our impulsive trigger point for a big wave 3 situation. So we'll keep a close eye on that. If we were to look at it through a head and shoulder lens, which I think I'm going to be able to find in one of these options, this one here. So a head and shoulders pattern would be more of a left shoulder, head shoulder, or head up here into a potential right shoulder, and then a break of this neckline, taking us down into this low range anyway. I'm not expecting us to kind of break down beyond a double bottom with where we were previously, but you can kind of see some data in there. Ultimately, if we do see an impulsive break and down to 28,925, then that's going to be interesting in itself. It does look then like we have this move up here still very much in play if it's a double bottom, where we'll be testing those highs again. If we have the impulsive break to the downside, then we're going to be probably looking at some significant lows here on BTC. Okay, so that's going to be the 1 hour time frame. Let's take this up into the daily. And from our daily standpoint, for Bitcoin here, we can still see that we are looking for this little move to the downside. We saw the volatility yesterday back above the 50 EMA. We are still now pushing and trying to turn that into support. We are correcting our momentum indicator, our stochastic, but I suspect that we are going to have to come down into the 28,294 to 29,176 with the potential of a breakdown really deeply here to 27,284 of the 200 EMA. I'm not expecting that to happen because we are correcting quite nicely and holding quite quite well. So just a move into this previous area of demand should pretty much do it. Every time we tap into this range, we do reverse very quickly. So we're just looking to come down into that range a little bit, probably on the higher side there at 29,000, and then kind of rally on up from that point. Okay, as we are looking for this move up on our daily time frame. Coming up towards the 34,946 to 37,051. The CME gap sits up there, and this is going to be the obvious area for rejection and a good move to the downside to be had from that slightly higher range. Now, I have not been prepared, but we're going to come over into our weekly time frame, but this time actually put it onto Bitcoin because I wasn't there already. Let's go ahead and do that. So on our weekly time frame here for BTC, you can see that we're up in the area of previous resistance. We are consolidating in this range quite well at the moment, so we're looking to see if we can break on through it. We're holding up, so nothing too much there to kind of worry about or get concerned with. We will be looking for this break to this next area of resistance, which comes in at the 34,324 to 37,713. This is no coincidence that it falls in line with our daily chart and the daily idea that we have that kind of CME gap up 35,000. When we can see up here, we do have this area of interest as an area where we were previously finding good support and can turn into resistance. I suspect that because we have no trend-based structured move coming up here and all we have are these overlapping corrective patterns, then I think essentially we are likely to see a $20,000 Bitcoin again. $20,000 Bitcoin is going to destroy those altcoins, specifically if they're new or have just recently set a new all-time low. I say all-time low, but bear market low. So many projects in June 2023 set new bear market lows. There are some projects that in the last week have set new bear market lows. Bitcoin going down to $20,000 is going to crash a lot of those altcoins also down into new bear market lows as well. So Bitcoin doesn't have to. Bitcoin's looking strong to not have to go down into a new lower low. However, with a V, however, we have to consider that our moves to the downside here are yet to actually come down to the curvature of our line. If we connect all the lows across Bitcoin's history, well, then we would be expecting us to move down towards $12,000 or $10,000 Bitcoin, right? And so if we connect all the highs, then obviously in the next bull run, we're looking at $115,000 Bitcoin. So this is just, again, not exact science. It's not perfect by any stretch of the imagination, but we can see here that, if we were to follow this pattern of data, then of course, we would be looking at basically coming down deeper. Now, of course, we can curve this line. We can change how this kind of, looks and is perceived a little bit. We have to kind of adjust things up a little, try to find, where things currently sit and how we can kind of get these things aligned. Maybe this was just an anomaly, right? There's lots of different ways that you can maybe articulate it to try to make it fit. But ultimately, to me, the only way it really fits is if you're true to this and you try to get them to connect all those low points and all those peaks, then you see $12,000 USD on the lower side for BTC on the weekly time frame. Our momentum is actually in a precarious position. We can continue to push up into that kind of $37,000, $38,000 level of resistance that you see up here, but that's going to put us right back up in overbought, and we're likely to see a correction there. So just be really cautious with that. We're overbought on the monthly. We're not where we need to be on the weekly, so we can go up a little ways here, but ultimately we'll see if momentum does come on back in any way, shape or form. Let's take this up into some data then. So BTC data is something that we have available for our members, so on-chain data, membership.𝗕𝗘𝗪𝗏𝗧𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 plans. However, if you do not want to continue with your plan, make sure you go to the profile area and you cancel it. Okay, if you do not cancel it, you will be charged. There are many different plans, many different benefits, everything from exclusive videos, exclusive technical analysis, through to alerts, things that Chris and myself are doing, the Cheeky team are doing in terms of buying, selling, accumulation areas, all the way through to trading, and whether you want your trading alerts and things like that. And of course, you can get access to absolutely everything using this one down here as well, right? All of them have a 7-day free trial. So what have you got to lose? You can check it out and see what you think. Ultimately, we're going to be coming over to the data zone. We're going to be going over to Bitcoin here. We're going to load up the Bitcoin data. We have the overview. We can see that in the last day, we've seen 843 new BTC issued. We can see that there were 497,000 transactions that cost $564,000. There were 926,000 active addresses for Bitcoin and for 48.5 million accounts. We might do a percentage on that as well to see if that actually helps take a look at activity levels. It's been 642 days since we hit our all-time high for BTC. Taking a look at the exchange-based data, you can see that there's been recently a lot more inflows going on than outflows. If we take a look at this from a Q3 point of view here, you can see that there has been more Bitcoin coming onto the exchanges than has been coming off of the exchanges. This is not a good sign. This would be a very bearish thing to be kind of thinking about. So just bear that in mind, that there are some interesting things going on at the moment. In terms of liquidations, we have $9.9 million of liquidations. Binance was the exchange with the highest liquidations at $2.83 million, of which 39.26% were long positions that were liquidated and 60.74% were short positions that were liquidated. We can see that Binance was 28.5% of liquidations, OKX was 24.7%, BitMEX was 21.18%. That is unusual. We don't normally see BitMEX climbing up the list here. So BitMEX was 83. No, it's actually $2.1 million of liquidations. Very unusual for BitMEX. So we'll keep an eye on that. Bybit is 13%, 𝗕𝗄𝗪 is 10%. Now, 𝗕𝗄𝗪 was also really ranking quite aggressively recently during all those insolvency rumors. Now they've kind of called off their liquidations. This could be a mixture of a couple of things. One, maybe they're no longer insolvent because they've liquidated so many positions, or maybe that people are now avoiding the platform because, is potentially insolvent. Either way, we can see here that 10% of total liquidations are 𝗕𝗄𝗪, coming in at $1 million of liquidations. BitMEX is the new concern here because it's unusual in comparison to where things were previously. Keeping an eye on this every day really helps understand whether or not you see these unusual spikes in activity. Wallet counts are very interesting as well. On the 1,000 BTC or more per wallet, we're up at the 2018 wallets. This is down 6.23% in the last year, so very aggressive on that move to the downside. Taking a look at the traders, these are 100 Bitcoin or more, 15,842 wallets. They're very flat across all metrics here. Year, 365 days, 0.41% down, but down across them all. Again, the black line are the wallets here, and you can see that these guys just are not really that interested, right? Were really aggressively big players back in the early days, has been, steadily coming on out during pretty much most of the liquidity boost to the upside. Essentially, they're more kind of ranging sideways here than doing anything. If you take a look at this, the retail side, the 10 BTC or more, that's 156,000 wallets. Again, these have got up because retail has been accumulating. So 4.71% in the last year, 13.15% if you have one Bitcoin or more, over 1 million wallets there. Going up into the larger side, 10,000 wallets, right? It's up 10.2% in the last year. This was something that people didn't quite fully understand or kind of my viewpoint on this, right? They're down 6% in the last 180 days. They're down 6.9% in the last 90 days, okay? So we know that they've been aggressively selling into this move to the upside here, okay? Now, this isn't unusual, okay, because every time you see big moves in price to the upside, these wallets are going to sell into it. They're going to grab that liquidity and exit their positions. They were accumulating during the bear market, okay, as they did back in 2018, and then they flooded the market right into the very bear market lows. Now, we haven't seen such a move, but we have started to see a little bit of volatility here ever since the end of November 2022, right? So when we got into that bear market low and started to move up, these guys were selling. They were aggressively buying into the lows, okay? You can see that there. And then as we start to move up, they start to come out of their positions, okay? They're grabbing the liquidity, they're taking profit. Now, for the most part, are we going to see a big, move to the downside like we saw previously? I don't know. I mean, it's there. You can see the history of this, but for the most part, they've seen a pretty significant decrease. We did top out up at 121 wallets, and we're currently on 108 wallets, right? So we know that there's some volatility to be expected within these. We've seen a pretty significant drop in the last 90 days of 6.9%. Are they going to aggressively drop again? I don't know, but we'll keep a close eye on it and see what that might mean for this space. Ultimately, whales, the typical whales for over 1,000 Bitcoin or more, are not backing the price action. They've been aggressively selling. They actually have been aggressively selling since February 2021, but you can see here that they actually really recently came out on March 2022 and have really aggressively come down quite from these highs up here from around the 2,294 wallets. We are down very aggressively here. So just kind of bear in mind that there isn't a lot of positivity to be had on the top level. This wallet of 10,000 Bitcoin or more typically is a wallet that can move the market quite significantly, and they've been draining the liquidity out of the market over the last 90 days or so. So just bear in mind that that's not a positive sign. Expect reversal to the downside once kind of retail investors start to really kind of feel the pain, start to dry up the liquidity and realize that the stagnant price action is because there is very little demand. This actually brings us over into the news side of things. Grayscale's Bitcoin ETF decision could happen this week. That's entirely up to you as to kind of what you believe on this one. Let me know in the comments below. Grayscale's investments has been seeking to convert its Bitcoin trust into a spot Bitcoin exchange traded fund. It could be getting a decision on its lawsuit against the federal securities regulator before week's end. In an August 11 tweet, Scott Johnson, a general partner at 𝗕𝗘𝗪𝗔𝗥𝗘, explained that law clerks in the United States District Courts generally cycle out in August, pushing judges to clear their caseload before new guard arrives. And so basically what he's saying here is that 30 out of 32 cases in March of 2021 and 2022 were heard by United States District Courts within 160 days of oral testimony, which also landed them in August. Added that it has also been 160 days since Grayscale delivered its oral arguments in its suit against the United States Securities and Exchange Commission, March the 7th. So 30 out of 32 times, they kind of get that kind of sorted. So it's going to be interesting. Is a decision going to be made on their lawsuit? And then obviously following the lawsuit will be the ETF, right? So that's kind of some speculation there. I think people are really kind of diving down into that. So possibly, but just because the lawsuit kind of gets a decision doesn't necessarily mean that the ETF, what they're saying here is that get the lawsuit out of the way, then you can have a decision on the ETF. And I think this is just delay. And I don't think there's going to be more than just delays here on the Grayscale ETF side of things. But, we can all speculate until we kind of, go blue in the face and all that kind of stuff. So one of those. Let me know what your thoughts are on this one down below. Let's move on over into exchanges, because there's so many different exchanges out there. As I did mention when we we're just taking a look at some of that data, right, we saw BitMEX climbing up the listing there for liquidations, which is unusual. So this is one of those situations where we have access to as many of these different cryptocurrency exchanges as we possibly can. And what we do is when we have concerns like this, we avoid those ones until, until things kind of clear up a little bit. Is it a concern? Is it not a concern? And so forth. And so having access to as many different cryptocurrency exchanges as possible opens up your options, gives you best strategies in able to kind of, which ones to avoid, where to go, and kind of just move around the exchanges that you utilize. Now, BitGet is my go-to platform at the moment. I use it for 100% of my leverage positions, 90 to 95% of my spot positions, and there are affiliate links for BitGet down in the description below. And if you haven't yet got a BitGet account, why not check it out? As I said, the link is in the description below. If you do use that link, you are eligible for up to $8,000 in rewards, depending on how much you deposit and trade to the platform. Just bear in mind that there are risks associated with trading. Make sure you're familiar with those. And by going down to our Discord server or clicking the link, you'll find out more information. Ultimately, BitGet is not my only exchange. It may be my go-to platform at the moment, but I do have accounts elsewhere, such as Binance, KuCoin, Gate.io, Coinbase, Bybit, crypto.com, right? So many different accounts, and it's good to have access to as many as possible. Make sure that you're familiar with how to put money on, take money off, how to deposit crypto, how to withdraw crypto, how to trade, whether that's leverage or spot, how to use cold storage, such as Ledger and things like that, and take advantage of these platforms. And of course, when you do KYC, if you need to, or if you do not need to do KYC, get familiar with each and every cryptocurrency exchange. And when you do this, you'll be in a really good position for when things crop up, things maybe are not going to plan. You have backups and you can move to different exchanges as needed. Ultimately, we do not keep crypto on the exchange. We like to kind of use cold storage such as Ledger, but don't worry, that Ledger Recover is not a leak. It does not have a backdoor to losing your private keys or anything like that you may have heard on crypto Twitter or crypto X now, or of course, on Reddit and things like that. These are misinformed. The Ledger Recover is a service that you have to sign up for. You have to send your keys to Ledger via signing several transactions whilst signing up for Ledger Recover as a service, which has a fee associated with it. I'm going to digress here a little bit, but essentially Ledger is actually perfectly safe. It is hardware, not software, which means it's only connected to computer when I plug it into the computer and put in my passcode and all that kind of stuff. Understanding what you hold is very important, not just from a crypto point of view, but also from a hardware point of view. So why not check out Ledger if you haven't done so already? There's a lot more details down in our Discord server, which is linked in the description below. Ultimately, setting yourself up for success in the future will require you to go ahead and sign up to many different cryptocurrency exchanges, including my personal favorite, which is BitGet, and doing KYC where you need to and making sure that you're familiar with how they all operate. And do yourself a solid, get yourself ready for the next bull market by getting yourself registered on as many of these exchanges as you possibly can. Let's go ahead and start talking about some of the trades that have been going on, because boy, oh boy, Reggie Classics, you've done a blinder here, right? So since, and he says it here, I thought I would share a few from last week since I'm showing them off on the videos. And so you're going to have a whole segment here, Reggie Classics. He's been smashing it recently on the trades. I mean, just take a look at this, right? So as we can kind of see, there's been a lot of trading activity from Reggie Classics. Is one of our members down in our Discord server. So if you want to chat with him, you can obviously come down into the Discord server. He usually hangs out in the members area, so you might have to become a member and all that kind of stuff. But for the most part, he's been smashing it with his trades, courtesy of some of the technical analysis stuff that we do here, education and things like that. A lot of this is on Reggie. Okay, so there's some extreme things. Let's go into this, right? So he has been shorting Bitcoin here, as you can kind of see, 210%. Very, very nice to see. Entry price was basically just short of 30k, coming down to that basically 28.9, which is really nice. We see another 85% on a H-bar long position, shorting 𝗕𝗘𝗪, which is not for the faint-hearted, at 80x. That one's high risk, and definitely all of you, Reggie. That one's not for me. 112% though, good gains. We can see here 60x again Bitcoin short. We can see over here 30x short on STMX, 31%. We can see again 58%. I mean, you're definitely on the degen side with the 120x there. XRP long, done well, but definitely not for the faint-hearted. We can see a 200x, 1,344%. Now, I imagine that this is more about stepping up your leverage as the trades really get ramping up, but Reggie will be able to confirm that. This is Shiba Inu long. Again, it's been performing well. We can see what else we've got here. H-bar short. We've got Bitcoin long. We've got Rune long. We've got, what's this one here? Rune long again, 160%, 22% on RNDR, 10x, so more realistic. Bitcoin long again, 50%. We have CTSI, 10%. H-bar short at 20x. We've got Shiba short, 98%. 7% on SHIB long, which is an interesting one. Again, SHIB short 37, Sol long 14%, AGIX long 31%, 43% on a HBAR long there, 10x, so a good risk management, good amount of leverage there, nothing too crazy, but good percentage gains. I do like anything kind of above 20% on a like 5 to 10x is just showing you good trading overall. No crazy X and no crazy leverage required, still getting really good gains. 20x again, 74%, looking very, very good. So absolutely smashing it, Reggie. So do continue lighting up the trading elements there. You're doing incredibly well when it comes to that. I have opened up a short position actually myself on Bitcoin yesterday, which is kind of testament to where we currently saw the structures going. Let me go ahead and bring this up, right? So within our structure here, I shorted BTC from up here, and it was at the 464, I think, just on the low side of our line here. A stop loss was nice and tight, and I have no take profit on this one because I still think I was waiting for structure to kind of play out a little bit. So now I think we're going to come down here for a nice 4.39%. I'll be looking at our yellow box target here at the 29.87. I expect us to go up further though before we move on down. I could come out of my position and then re-enter for another short. I might do that. But for the most part, doing well. Again, I like just, rinse and repeat, small amounts of profit, nothing crazy on the leverage side either. Ultimately, guys, though, I think I'm going to wrap this video up right there. If you have found it useful and informative, do smash that like button. I do appreciate that. If you're new to the YouTube channel, subscribe. If you are watching this on Twitter, make sure you do follow us here on X. And of course, make sure you do a retweet. We do appreciate that. Until the next one, though, guys, have a fantastic day.